Hello everyone, a very good evening. Welcome to Oliveboard. This is the CAIIB Foundation series for the June 2025 exam, and we are covering all the units module wise from our BRBL paper. Today we are starting with the Partnership Act, which is a unit 27 from our module D. So this act talks about the various provisions and how a partnership firm is formed, what is the meaning and definition of partnership, the essential characteristics, the relations of one partner to another, the relations of partners to the third party. Everything is covered under this Partnership Act of 1932. All right. Although the general principles of the Contract Act also continue to apply here in the partnership contracts, but here we are talking about the contract of partnership, which is regarded as a special contract. It is regarded as a special contract. All right. So let us start with this unit. So, in the Partnership Act of 1932, we have under Section 4 the important definitions of partnership, partner, firm, and firm name. So, partnership is the relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. So, either all the people involved who have agreed to come into a partnership or any one person on their behalf. For example, if A and B buy 10 boxes of mangoes and they're agreeing to equally share the mangoes for personal consumption and pay the purchase price thereof, this is not a partnership. However, if they further agree to sell some of the mangoes and then share the profits from the sale, then it will become a partnership. So, for the purpose of generating profits and sharing them, the business is carried by them. All right. Now, if we talk about the characteristics of a partnership, so there should be an agreement. This agreement can be expressed or implied. Then there should be a business. The term business conveys some actions involving transactions. There should be some profits arising out of those business, which may be shared among the partners in a definite ratio, which is agreed. And there should be mutual agency. The contract of partnership is regarded as an extension of the contract of agency. All right. So agreement, the relationship with the partnership arises from the contract, right? It may have its own characteristics, like it can be a fixed for a fixed period of time or for a completion of task. Then if we talk about the business, for carrying on some business like trade or any occupation or a profession, right? And it must be legal, obviously. Then if we talk about the profit, so any business is started to make profit, which is the main aim, and it will be shared among the partners in a definite ratio. If any partner who is deprived of the profits or a share in the profits, then she or he will not be considered as a partner for carrying on the business. All right. And mutual agency, because agent is a partner which can bind by his acts the firm or other partners. All right. So that is why we term the partnership as an extension of the contract of agency. Now, if we talk about the types of partnership, so basically we have three types. We have the partnership at will, where no provision is made by a contract for the duration of the partnership or the or for the determination of the partnership, determination or end of it. So a partnership at will can be dissolved by any partner by giving a notice in writing to all the other partners of their intention to dissolve them, and the firm gets dissolved from the date which is mentioned in the notice, which is mentioned in the notice, right? Then second type is partnership for a fixed period, for a particular period, and after that it comes to an end, right? So here the partners, if they want, they can continue the business after the fixed period also, but the original contract will be that it is for a fixed period. For example, the selling of mangoes for the season of summers only, right? Then a particular partnership for a particular job or assignment which is taken up by two or more persons and they have decided to share the profits. All right. So for a particular task, the partnership has been formed, and once the task is over, the partnership will get over as well. So these are the three types of partnerships, which is given in the Partnership Act. Now we also have the limited liability partnership, the frameworks of which are contained in the Limited Liability Partnership Act of 2008 and the Limited Liability Rules of 2009, which are known as the LLP Act and the LLP Rules, respectively. Both of these things are important, the LLP Act and the LLP Rules, right? And what is a limited liability partnership? It is a body corporate and a legal entity which is separate from its partners. It has a perpetual succession, means that even those who have formed or created the partnership, they leave the partnership or the firm, or the important management or directors are changed, then also the partnership will not come to an end. This is the meaning of perpetual succession. Even the original formers, even if they leave, then also it will continue and the succession will be as it was earlier in the original contract, right? So the LLP is a separate legal entity which is liable to the full extent of its assets. The liability of the partners is limited to their agreed contribution. LLP on a whole is responsible for all the assets, but each and every individual partner, their liability has been agreed beforehand, right? So they're liable for their agreed contribution. Further, no partner is liable on account of the independent or unauthorized actions of other partners. If three people are there in this partnership, one of them was involved in the money laundering, so others will not be held liable. No partner is liable on the account of independent or unauthorized actions of other partners, thus allowing the individuals to be shielded from the joint liability created by the another partner's wrongful business decisions or misconduct. All right. So it is, we can say it is viewed as an alternative corporate business which provides the benefits of the limited liability, but it also provides the members the flexibility of organizing their own internal structure as a partnership, and it is going to be based on a mutually agreed agreement, a mutually arrived agreement. So it is a LLP is a body corporate legal entity separate from its partners. Mutual rights and duties are governed by the agreement. No partner liable for the independent or unauthorized actions of other partners. Every partner in a LLP is an agent of the LLP, but not the other partners of the LLP. They're responsible to the firm, not to other partners. All right. Then there will be designated partners and they will have the designated partner identification number. Central government will investigate the affairs of the LLP. So these are certain important provisions. Now if we talk about the relations of a partner or relations of partners to one another, so there are some general duties of the partner, the general duties where the partners are bound to carry on the business of the firm to the greatest common advantage, to be just and faithful to each other, and to render the true accounts, full information, everything to the partner, their heir or their legal representative. Then they have the duty to indemnify the loss which is caused by the fraud. This is the duty which is an absolute one, and no partner can contract himself out in the agreement, right? And there's also the determination of rights and duties of the partners by contract between the partners, which is again arrived by the mutual agreement. So the conduct of the business should be just and faithful, they should be diligent to their duties, there are certain mutual rights and liabilities, And regarding the profit or property of the firm, it includes all the property or the rights in the property originally brought into the firm or later acquired. And also it includes the goodwill of the business. So authority which is available to a partner is actually the capacity in which the partner can bind the firm, and it can be express or implied. Express is something which is expressed in written. Implied can be something which is lawfully interpreted. It is taken and obvious. So the partners in a firm may be by mutual agreement amongst themselves. They can extend or restrict the implied authority of any partner, and any act which is done by the partner on behalf of the firm within his implied authority is going to bind the firm, unless the partner with whom he is dealing knows the restriction or does not know or believe that the partner is to be a partner. So any act which is done by a partner is to be binding on the firm. That is why all the partners should be diligent, and they should be just and faithful to the firm as well as other partners. However, there's an exception. In the case of emergency, the partner has authority to do all the acts to protect the firm from the loss, and the firm is again bound by such acts. So, if there's an emergency which requires immediate action by a partner, although that action was not under their authority, then also the firm will be bound by such acts. So, they can take action to protect the firm from loss. Then, if any partner wants to bind a firm, they want to agree into an agreement or they want to sign any document, they have to do so on behalf of the firm. So, a partner must do the activities in the name of the firm and execute the documents on behalf of the firm. They cannot simply sign an agreement in their own name to purchase goods for the firm and say that since he is the partner, it is implied. No, they have to do all the actions in the name of the firm. They cannot personally do anything and say that we have done it for the firm. All right. So this is regarding the authority. This is regarding the authority. For example, if A, who is a partner in the ABC and company selling groceries, enters into an agreement with X to supply him car spare parts in the name of the firm without authority, and also obtains an advance of rupees 50 lakhs. So the other partners would not be liable for the amount so received. That is why all the actions should be binding, right? And obviously, we have discussed that the extension and restriction of the partner's implied authority is also there. If any action is to be bound on the firm, it is to be done on the name of the firm. Then what is the liability of a partner for acts for the firm? They are jointly. Every partner is liable jointly with all the other partners, and so severally for all the acts which are done while he is a partner. This is a core business of the partnership, right? So they are jointly liable. If, however, again an exception to the joint liability, if a partner commits some wrongful act or omits doing something in the ordinary course of the business or without the authority of the other partners, and consequently a loss or injury is caused, then the firm is liable thereof to the same extent as the partner. Right? So the liability of the firm for the wrongful acts of the partner to the, for example, where due to negligence of the managing partner of a firm, the shaft of, let's say, the mine they operated is not properly guarded and a workman falls and is injured, then the firm will itself become liable. It is the liability of the firm for the wrongful acts of a partner. And then there is the doctrine of holding out, which is very important. Questions have been asked from this topic in all the previous sessions. So it states that, section 28 states that anyone who by the words spoken or written or by conduct represents himself or knowingly they permit himself to be represented to a partner in a firm as liable as a partner, and The As a result of this, he induces others to give credit to him. Then he is known as a partner holding out. They're not really a partner in the firm, but they're wrongly representing themselves. They are permitting themselves to be represented as a partner of the firm, and they're giving any credit out. Then they are known as a partner with holding out. This is the doctrine of holding out. So, a transfer by a partner of his interest in the firm does not entitle the person to whom the interest is transferred to interfere in the conduct. If person A, they transfer their title to person B, this person B will not have it will not entitle the person to interfere in the conduct of the business. They will only receive the share of profits of the transferring party, and the transferee also has to accept the account of profits which are agreed to by the partner. So this person B is not going to have any more powers than were there with the original person who is the transfer related to the share of the profits. And on dissolution of the firm or cessation of the partnership business, the transferee is entitled to share a business. They will be entitled to have a share in the assets of the firm and verification of the accounts to ascertain his share. Right? So when a transfer is made to another person by a partner, they're only transferring the right to the profit and not the right to interfere in the course of business. Alright, so it does not entitle the person to whom the interest is transferred to interfere in the conduct. So these are the various relations of the partner to one another and the relations to the partners to the third party. And that is all from this. We will be covering the leftover topics from the Partnership Act in tomorrow's session. So now you can join the CAIIB Super Elite plan, which is the all-in-one plan, where you'll get live classes, mock tests, and notes of all your papers. All the batches will be here under this one plan only. And you can also use the code CHAMP, which is the champions sale, and you can avail flat 50% off on your CAIIB subscription. So avail the benefit, join the course now and start your preparation. I will see you again tomorrow with the next session. You can download the PDF from the description box. Don't forget to like the video, share it with your fellow aspirants, and subscribe to the channel because these sessions on a daily basis are very important for your exam preparation. So thank you so much and all the best.